Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, March the 19th, 2018. My name is Doug McKay. I am the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses, as nobody can tell you what the market's going to do. So we create two main hypotheses, which basically will be put in play depending on who the controlling participants are, either the buyers or the sellers. And then we have two alternative hypotheses, which are our trend day or range expansion days. This is a subscription room. If you're interested in checking it out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to, and then we do live trading and analysis during the course of the regular trading session. So please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any seen here are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. So taking a look at Friday. Friday, we are looking for a balancing day with a upward skew. Basically what we got was a balanced day. You can see that we were unable to break out of range high. Another day of balance in this area as we start to compress and get ready for a next trend change. The value is just sitting completely sideways right now. If you look at the bigger picture, let me just collapse down. So this is the balance area that we've been in, and the value area has been expanding on it. It was down at 54.75. It's expanded up to the 92.75, basically encapsulating the 6 days of balance that we're in. The 6-day micro composite is the former value area high of the larger time frame. So it's kind of an interesting scenario, but we've broken below that. On Friday, we talked about the fact that we needed to accept this 54 and to get price acceptance higher to get the move back up towards the 77 to 82 area. And for the most part, we didn't. We just sat in this bottom price acceptance of the 6-day micro composite, and then Sunday we opened at 56.25, so the week opened, and then we've gone down and hit some of those targets below, with the low overnight being 33, which is just above these two micro composite VPOCs, former smaller time frame price acceptance areas at 31.75 and 33.50. So they found the buyers there so far in the Globex, and we're working our way up. But let me just take a step back. We should take a look at the news first. There's not a lot of news today and tomorrow. This is a Fed week, though. Today we've got Bostic speaking from the Fed, and we've got the 3-month and the 6-month bill auction. But that's about it for North American news. Tomorrow we've got Canadian wholesale, and then we've got U.S. Red Book, and then the 4-week bill auction and the API weekly. But again, no real news. The big one, of course, is going to be Wednesday. Wednesday we've got mortgage refinance at 7 in the morning. We've got current account. Then we've got existing home sales, which will be a big one, crude inventory, but the major on Wednesday and this week is going to be all about the Fed. And this is a Fed that has a press conference, which apparently they're talking about them switching over to having a press conference at every Fed rate announcement. So that should be interesting because it draws the volatility out in time, because you never know what the Fed chair is going to say, the new one being Powell. So anyway, that's the big news this week on Wednesday. And then on Thursday, We've got initial jobs at 8:30. Housing price index. There isn't really much manufacturing PMI. So again, Thursday is not a lot. 10-year tip auction. And then on Friday, we've got core durable goods, goods orders, non-defense. And then we got a bunch of Canadian at 8:30. So 8:30 is going to be a big news time. And then 10 o'clock, we've got the new home sales. So really, Wednesday and Friday is where all the action is going to take place today or this week in terms of scheduled economic news. Now, not to say there isn't a lot of headline news, because there's lots of headline news with the tariffs and everything else we've got going on with the Trump firings and just the overall beautiful White House volatility that we've got with Trump in charge. So let's take a step back here. I always do this every day. It's a good routine for you to get into. People think it's a little bit elementary, but let me tell you, I don't know how many times it's saved me in getting too biased to one side or the other. So what I do is I start with a simple candlestick chart, a 9 EMA and a 20 SMA. Those are the moving averages that I like to use for my homework. Don't really use them to trade. I use them just to give me reference. And what I'm looking for is, do we have good slope and separation of the two moving averages? Is price paralleling the 9? How strong that trend is? And then if we're coming down and testing the 9 or breaking the 20, whether or not we're challenging the trend or possible start of a new trend. And nothing changes here in the bigger picture on the monthly. We have to get below 2640 just to challenge this trend, and we have to get below 2440 in order to break it on the longer term time frame. So the trend is very much intact. On the weekly, we thought we were seeing the possibility of a start of a downward trend, and then they took it back. And what are we getting? We're getting slope and separation to the upside, although we are challenging the trend at 2746.50 on the weekly. And if we get below the 2710, then we're possibly seeing a change of trend on the weekly. On the daily, you can see that we are in this balance area, that we're in consolidation, we're getting ready, and I think we're probably going to see a move today and then balance tomorrow, and then some type of continuation move and a breakout on Wednesday with the Fed, because we are likely going to get a rate increase this time. But on the daily, we're below the 9. We're above the 20. If we get below the 2740 area, then we get a possible trend change on the daily. Going to the 4-hour intraday, you can see that we are starting to see a possible trend change, and we've got slope and separation to the downside. So there is this weakness coming in the market. And basically, it came in on Sunday Globex last night, and we went from 56 and a quarter down to 33. And so far, I found some buyers and popped up about 10 points. But we are not back above the 9 or the 20. Watch this. I'm using 27.48 and a quarter as my over underline. I'll show you why in just a minute. And then just one last one going down to the 30-minute. You can see that we were in a downward trend, and now they're trying to take it back. So this 44.45 area, remember last week's low was 27.45. So if they can get back above that and then challenge that 48 and a quarter, then we're taking the trend back on the smaller time frame and a possible move back up into the gap close. And let's just take a look at what that looks like. Again, here's the big picture. The reason why I'm using the 48, if you see here, the value area low for the 6-day and above the gap still, we still have this gap down here. at the close of this day, March 8th, and the close on that was 27.44. So there is a gap there right now. If we fail to get back above this value area, that gap, and then these two targets down here, which, as the two former microcomposite VPOCs, 31.75 and 33.50, with the overnight low, kind of split them in the middle there at 33. And then the big picture target right now is the microcomposite VPOC from the breakdown day. We tried to hold value here, we gapped down, we broke down, and that's where we went down to that 25.29 in the Globex, found the buyers, rotated us back up into balance, and this is where we've been. And I think this Fed day is going to give us a breakout either to the upside or to the downside. Hard to tell yet, but right now we know what levels we're watching. We're going to be watching the 48 for the over-under. Above that, looking for a move back up into the 6-day microcomposite VPOC at 54.50, and the gap close from Friday. The close on Friday was 55.75, and then see if we can, accept this price again and continue the auction up. Or if we fail to hold that 48 or get above the 48, if we don't bounce at the 31, then I'm looking for a bigger move down today, down into the 18-19 area, and coming back down here into balance, going into that Fed announcement on Friday. We'd be right back in the longer-term price acceptance, waiting, for who takes control and takes us for a breakout of this value area. So taking a look at the overnight inventory is basically 100% net short in time and volume. We've got a double distribution with 45. Remember, 45 being there's a CLVN there, but it's also the week low from last week. And our VPOC is 41.50. And we're kind of chopping around in this lower distribution, failing to get above the mid and the VWAP. There probably could be, you're going to watch the 45 on the open, because we get above the 45, then you should see some balancing of the inventory and a move up towards that 48 area, which is also, a high distribution area from the overnight, and then see whether or not the sellers step in or the buyers stay in control. So in terms of levels, I've already got my levels set up for the most part on my chart. The 20-period full session daily ATR is running at 41.78. What does that mean? It means that off of the range high so far, we have range capabilities to get down to the 14.75. That's our daily downside ATR target. And, off of the low overnight, we have capabilities of getting up to 27.74.75. That's a large range, okay, that we can go without expanding the 20-period daily ATR. So, again, this market can still move to the, to the 74s up or the, 15s down. What I'm looking for in terms of, let's put our overnight high and low. Our overnight high is the 56.50, one tick above the week open, and just a few ticks above the close from Friday. And then on the overnight low is down right in the 33 area, which is splitting those two former microcomposite VPOCs. So in terms of hypotheses, I'm looking for an open auction out of range. We've got a large gap. So if we open right here at 43, what are we trading right now? We are trading 43.25. Again, this will have to be adjusted on the open. Our close on Friday is 55.75. So our half gap fill is 49.50. And again, this is an approximate because I have to adjust this on the open. Whoops. So in terms of the open, we have to take into account that we have a large gap. So gap rules are in effect. So my main hypothesis is a open auction out of range. I'm looking for a move up into the 48 to 49 area. Then I'm looking for responsive sellers to step in, rotate us down through the overnight VPOC, chop in here, come down. Remember that our NFP, non-farm payroll, scene of the crime, has not been visited in the RTH session. That's 38.75. That is my primary target for hypo 1. I'm looking for balance here, a push down lower into the overnight low, and then basing and coming up and chopping in around the 36 to 41 into the close. So open auction, move up, failure to get above the 48 or a quick pop up, and then rotation down into the main target, get a probe lower down into the 33, maybe even the 30, and then base and start working our way back and chopping in this area between 36 and 41. So that is hypo 1. Hypo 2 is going to be a gap and go day because of the fact that gap rules are in effect, and I'm looking for an open test drive, a push up into the 45, or 48, similar to hypo 1, but then I'm looking for sellers to take control and rotate us down through to this 33 overnight low, and then fail from here and push down. The month open on the M contract is 27.2375. That's in the Globex, and a push down into the microcomposite VPOC, which is down here in the 17 and 18 area, and basically find a base there and start working our way up and closing somewhere in around the 27 to 25 area. So that's hypo 2. Hypo 3 is an open auction out of range, a push down into the 39, base there, find buyers, come up, fight the 48, chop between the 48 and the 45, and then break higher and come up into the prior balance and the 6-day microcomposite and close the gap and chop around in here in the balance that we've had for the 6 days up there. And then hypo 4 is a open drive back up to close the gap, come up into the 48, chop here, push up, close the gap, and then get continuation and move all the way back up into testing the 65 to 67 area with possibly a late bait probe up into the 69.75, but closing in the upper end of this 6-day distribution. So that's my 4 main hypotheses. Just take a quick look at gold. Gold broke that 14 level, and we're coming down. We were looking for the push down to the 13.036. We got as low as 13.0740, and we're just basically chopping. Very key level now, 14. If 14 fails again to allow us to get back above between the 14 and the 16 area, if we fail there again, look for the next push down to take us down to test the 1300. And anything below the 98.20, then we're looking for the bigger move down into the 1284.90. If we get above the 14-16 area and we hold, look for them to go to the 19 and 22 area and back into this this big chop that we're in. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.